I'm Steve Orr, Chief Investment Officer for Texas Capital's Private Bank. Happy New Year. Stalls, stocks, and what's coming? What do they mean for our portfolios? What should we be thinking about? The history does rhyme. We humans do take comfort in things we know. And we do know, thanks to our trusty, dusty Stock Traders Almanac, that a positive Santa rally followed by a strong first 5 days of the year for stocks should bode well for the full year returns. We'll see. The Santa rally concludes Monday the 5th. The first 5 days of trading, Thursday the 8th. If the S&P 500 posts negative returns for those 2 periods, dips in the stock indexes are likely later in the year. This fits with midterm election years, which usually see a consolidation or mild correction in the middle of the year. Again, these are not things that have to happen, just letting you know what the predominant historical pattern is. Now, the S&P 500 and NASDAQ's recent stalling out near all-time highs is not a concern yet. Low volume and lots of folks being out for the holidays is the usual culprit. So let's get this first week of trading under our belts and see where things stand. But we've talked at length about how events can rattle markets temporarily, but rarely change the long-term trend. Silicon Valley Bank in 2023 and Trump tariff trauma last year are 2 good examples that dropped stock indices between 8 and 20%. Now, they quickly recovered once markets figured out that company earnings would not take a big hit. Now, last year, silver's big rise, kind of the final nail in the cheap goods era of the last 30 years. Spot silver prices spiked into a bubble 4 times since 1980, and each time they retreated very quickly. Now, this time, we think they may stay relatively high. Why? Because China announced export controls effective last Thursday. These controls restrict 60 to 70% of the world's refined silver supply. Is it going to rattle stocks? Higher metal prices are already crimping margins for manufacturing firms, and the broader tech-led indices, they're going to fare okay. We think producer prices are going to continue to crawl higher, and commodity strength in general is going to help value stocks this year. Well, what else is on the horizon? The Supreme Court ruling on Trump's use of the IEEPA statutes should come down sometime in the first quarter. On January 30th, the U.S. government funding expires, so here comes another shutdown. Chinese New Year starts February 17th. At the moment, Trump is scheduled to visit China in April, and May 15th is Chairman Powell's last day as Fed chair. So there's plenty of excitement on tap. Now, rates, we think they're going to go higher over the course of the year if we do get our expected economic growth. And stocks do lead the economy by 6 months to a year. The last 3 years of strong stock returns bode well for improving earnings in the economy. Now, there are 9 cases in the modern era where the S&P 500 has had 3 straight years of 10% or higher returns. And in 5 of those cases, returns were negative in year 4. So history does rhyme. We do expect a bumpy ride for stocks this year, but ultimately finishing the year in the green again. Our indicator dashboard does show green for the economy and steady for rates and steady for small and large cap stocks. So stay alert. Happy New Year. Till next time.